currently there's an 86% chance of a cut in September. This one's based for the Bloomberg data. They have a 50% chance of a cut in October and a 30% chance of 3 cuts by December. So what could happen is they see a deceleration, and all of a sudden they take that closer to 3 rate cuts by December, right? Yeah. And that's when the curve starts to go down and maybe closer to an 80% chance of a cut by October. Doesn't mean they're going to get 3 rate cuts. All it means is you're just playing their expectations and their pendulum swinging, okay? Right? Because they don't really have a inflation nowcast that they trust. We do, which will help us.
So even if it comes in at 2.8, which would be an acceleration sort of at the top end of what we're estimating, how do you think things react? Because it's sort of, everybody's sort of, if we believe consensus. And by the way, does Polymarket have anything on inflation?
Yes, they are also at that. They are at 2.8 as well.
Okay. So everybody's kind of right around there. Our base case is for a slight dip. So,
yeah.
You know, even if it does come in line, you know, maybe that's expected anyway.
If it comes in line, then that's what the market was expecting. So I guess you would expect a continuation.
Yeah.
And people are, even with that, they're expecting a cut in the next month. So maybe they don't get their 2 cuts, maybe they get 1 cut, and it's just in that September meeting, but you're still cutting into accelerating CPI. This is CPI of 2.8%. Let's say it is 2.8%. 2.8% is a very high number historically for the U.S., and they're cutting right into that. That'll be inflationary. Your large cap tech, Bitcoin seems to love it. So,
but that gets to sort of the second part of the equation, which is the labor market, where we have seen some softening. You know, you were talking about pro-growth, buying pro-growth on the dip. But you know, what are your thoughts on labor? We didn't really touch on it too much this morning, but we have seen some softening. Non-farm payrolls, obviously, last month was a lot weaker than expected.
My opinion on,
I mean, it's hard. It's non-farm payrolls. It is hard to, you know, read too much into 1 month.
Yeah,
but
for me, it's mostly that there's a deceleration or a weakening in labor. We don't have a negative quarter-over-quarter GDP coming, right?
Yeah.
Expectations are for that to be up 2%, right? So even if there is some weakening, they're still expecting growth overall, and so they're not inflationary, or sorry, they're not recessionary numbers that are coming from the labor market. And if it's not recessionary and you have inflation so high, a cut is just going to inflate things.
Accelerate inflation.
Accelerate inflation, and I'm pretty sure initial jobless claims are also pulling that up. Are also coming off of their local. They're pretty muted. So and that's a lot of times a front runner for these non-farm payrolls. It's just a continuation of kind of the same old, right? It's the same trend in jobs that we've seen for the last year almost.